Hey traders, David Frost, LazyGapTrader.com. In this video, we're talking about day trading. More specifically, we're talking about trading the gaps and how gap trading is by far the single most consistent and profitable day trading strategy you're going to find across the markets today. I do a couple of things. I teach a course where I teach two specific gap trading strategies. The first one is the morning gap trades. That's where stocks that are gapping higher or lower at the open create an opportunity for traders. And the opportunity is for traders that can identify a specific price level where these stocks will first be drawn to like a magnet and then have a price reaction from in the other direction. The second part of the course are the gap fill trades. When stocks do gap higher or lower at the open, they leave what's called an open gap. At some point in the future, those open gaps will be filled. In the course, I give traders a tool to track them, and I also teach traders how to trade them. Not all trades are created equal, and therefore it all depends on how a stock is coming in to fill a gap on whether or not it's a viable trade. All that's discussed in the course in great detail. The other thing I do is give traders an opportunity to get my gap trade sent to them each and every morning at 9 o'clock a.m. Eastern Standard Time, 30 minutes before the markets even opened for business. Here's a copy of the email that went out to subscribers this morning, and as you'll see, we had a potential 8 gap trades on the board today. Now this strategy is very specific. We only want the trades that hit their specific price level that we learn how to calculate in the course. Unless the stock comes in to hit the specific price level, then we don't want it. It's a no trade. We only want the highest probability trades on the board. Now, out of this list, 4 hit their price levels today and 4 did not. So the 4 that did not are off the board. They're just no trades. The 4 that did are a different story. The first one was 3D Systems. Gap lower. Support levels are $13.81, and I gave a secondary level of $12.76. Stop and profit target is about 12 cents to 25 cents. These are minimum profit targets. On a low price stock like this, we're not looking for a tremendous gain. If we get one, that's great, but we have to take what the market gives us. These are scalp trades and these are day trades. At minimum, we want the scalp trade and move on. The second stock that hit its level was Century Aluminum, CENX, gap lower. Support levels are $13.89 and $12.80. Stop and profit target is about 12 to 25 cents. Again, minimum profit target. The third one that gave us a trade today was HOLX, gap lower. Support levels are $39.78 and $37.43. And then I even gave a third level if it should have gone much lower. Stop and profit target is about 25 to 45 cents. Again, minimum profit target. And the fourth and final one that hit its level so far today is Sierra Wireless. Gap lower. Support levels are $24.92 and $23.45. Stop and profit target is 18 to 35 cents. In addition to this, I give a list of potential gap fill trades for the day, and we actually did have one of these on the list. AIG hit its gap fill level, and we'll go over that one as well when we go back to the charts. In fact, let's go over to the charts. The first one we'll look at is Triple D, 3D Systems. The stock closed yesterday up at $17.01. The stock was opening today at $15.71 and obviously traded lower. What happened? It came right into the $13.81 level, making a low just pennies below that of $13.75 and bounced higher. Now the stock has made a high thus far today of $14.18, and that certainly gave us the profit target we were looking for. The stock's backing off now, but it's also making what I like to call bullish consolidation, and maybe the stock goes higher, maybe it doesn't. However, as far as I'm concerned, this trade is long gone. It's over. Sometimes the stocks rip extremely higher, and in my course, I teach a specific lesson on how to take advantage of those stocks where we take some of the profit initially and let the rest ride and turn the trade into a risk-free, emotionless trade. But today on Triple D, this trade's pretty much over. Now CENX, which is the next one, you can see where the stock closed yesterday at $16.74, was gapping lower at the opening at 1502 and immediately traded lower. Now, obviously you can see where this stock cut through the level like a hot knife through butter. However, I want to take it down to a 1-minute chart and show you something. Before I do, you'll notice that the stock has climbed back and is fighting around the 1389. That goes to show you the importance of this price level. When traders take the course and they understand why certain stocks trade to these specific price levels and why these price levels are supportive of the market, they get a whole different outlook on trading because it gives them an added advantage of why certain stocks will trade to certain levels and why these price reaction in the other direction will happen as well. But let's take it down to a 1-minute chart. I want to show you something interesting. You can see here when the stock came into the level, it came up short. It made a low in these two candles of $13.95. Here's the low, $13.95. The stock bounced in the next candle, the next minute of the day, all the way up to $14.22. That was the bounce we were looking for. The stock came up short and bounced higher. And what this does, and it's specifically taught in the course, it takes the trade off the table. We got the bounce we were looking for, only the stock never reached our specific price level of $13.89. That happens, it stinks, but that's the way the market works. The market doesn't necessarily give us exactly what we were looking for each and every time, but what we have to do is we have to take what the market gives us. If the stock bounces ahead of time, it's off the board. The second time around, we don't want the trade. We don't want sloppy seconds. It changes the risk profile of the trade on the second time around. The next trade was HOLX, and you can see what happened. The stock closed yesterday at $43.67, opening today at $40.20, and traded lower. What happened? It came right into the $39.78. This is the level that any trader that's taken my course is able to calculate on their own. They come up with the same exact price level. The stock made a low in this candle of $39.45 within the stop loss limitation, and just minutes later, the stock was trading at a high of $40.60 for a very, very nice trade. And after that, the trade's over. The stock came back down. Maybe it goes down to the second level and we get another trade. Maybe it doesn't. But this trade gave us exactly what we were looking for. You see how this stock came right into the level, pierced through it by a little bit, and then ripped higher. That's what we're looking for. Those are the trades we want. The last stock that hit its level today was Sierra Wireless. And you can see here that the stock closed yesterday at $29.40, opening today all the way down at $26.30, and traded lower. Now this stock, you can make a case that it actually came close to the level before trading through it. And I'll tell you what happened was I did get stopped out of this stock even though it bounced back. But we have to abide by stops. Not everybody's going to have the same stop. I give a range and I give it it's an about type of stop. You don't know exactly where the market's going to trade to each and every time. But what I'm giving you is I'm giving you specific levels that are calculated in a specific manner, and this has a very high probability as a general strategy. However, not every trade's going to work out. We know that. The business of trading is not necessarily an easy business, but when you have a strategy like this, you have an advantage. So I got stopped out of the trade and the stock bounced back. So be it. I can't win every trade. Nobody can win every trade. That's just the way it works. But what I can tell you is we win a large majority of the trades. And that's what makes this such a successful strategy. You can learn how to do this. You can learn how to calculate these specific price levels where stocks will be drawn to and have a price reaction from in the other direction. Even though, check Sierra Wireless out, even though the stock went lower than the stop loss, it still bounced back immediately. It shows you the power of these price levels. Now it's trading lower. Maybe it comes down to the second level. We'll see what happens later on. Any trader that wants to learn this specific strategy, how you can do this each and every day, and learn everything you need to know about how to trade the gap successfully, come over to check out the course at lazygaptrader.com. I'm David Frost. Thanks for tuning in, traders.